Hi and welcome to Investing 4.0 Visionary Investing in Future Trends. I actually had the plan to work on a new stock analysis, but frankly, the US election kept me quite busy, and it also reminded me how important it is to have a good strategy when it comes to investing if you actually want to achieve something. So today, I want to quickly share with you why it is so important to have a good strategy when it comes to your investments. All right, a good investment strategy is key to being successful on the stock market. Now, in one of my last videos, I mentioned that I'm basically overweighting Chinese stocks in my portfolio. This is not just a random decision, but the result of my extensive studies of China, including politics and economical factors. Now, I started investing when I was 12 years old, back then, of course, with my father, but I had some word in it and decided to invest in funds that were focusing on China, India, and the US when I was 16. So I knew that there were some high growth opportunities in China back then already and averaged about 17% per year on these funds. Now, when I started my studies, I actually had to close the accounts as I needed the money to pay rent and for basic survival. I re-entered the stock market back in 2014, but this time with no clear strategy. I invested a little money here and there. I had some random ETFs and a few single stocks, and luckily it was a good time to be invested as the general market was doing pretty well during the following years. In 2018, I decided to take all of my money out of the market again to reinvest it, but this time with a clear strategy and with rigid principles. And I will explain you my investment strategy, which is combining two approaches, one being focusing on long-term investments and the other on more risky investments, and some of them also more short-term to benefit from current as well as long-lasting trends. Now, why is it so important to actually have a strategy after all? My first argument is that it is helping you in being more objective rather than subjective. And with that, I am not talking about an expected performance of an investment like a company. This will always be subjective. Otherwise, all professional analysts would have the same price target for all companies. I'm specifically talking about managing your emotions. And this is already key when you are investing, or not even when you're investing, but when you think about the investment. Especially in the beginning, you might be afraid that you might lose some of your money. You might not be sure if another investment might be better than the one that you chose, or you might be hyped or even overconfident because you read a great article or read something or saw something on YouTube that is projecting hundreds of % of return, basically clickbait if you want to be honest. And you were hyped, and basically a clear strategy will define borders that you would not have otherwise. The second important thing is that it's defining your level of risk tolerance. So some of you might be very risk averse, whereas others are fully committed and are willing to lose a lot of their money, but therefore have higher chances of a great return. I assume that most of you are probably somewhere in between, somewhere in the sweet middle, right? The sweet spot, willing to take some risk, but not willing to potentially lose all of your money. Am I right? Now, a strategy will also define a clear weighting of stocks or ETFs or even regional exposure so that you can keep the risk tolerance that you define for yourself. One of the most important, but most of the time unknown mistakes by investors is the following example. Let us take a look at Alex. Now, Alex here heard from friends that you can make a quick buck on the stock market and with relatively low risk by running a combination of ETFs and single stocks. As mentioned, this is also the strategy that I am running. Now, as Alex does not want to take any major risk, he decided to, for example, buy a MSCI World ETF that represents basically the whole world, and also invest into single stocks, specifically Microsoft, Apple, Facebook, Amazon, and Alphabet, as they are tech giants and that are basically supposed to have a good performance in the future and be very stable at the same time. Now, what Alex did not check, however, is if that strategy actually makes sense and if it represents his personal risk profile. If he would have done so and done his proper research, he would have noticed that the single stocks he is investing in are also the top holdings of the MSCI World and therefore already represent 15% of his portfolio. By investing into these stocks additionally, like single stocks, he's overweighting them. So now imagine it is decided that these giants are to be controlled or regulated, like we hear in the news right now, or if any unforeseen things develop, like for example with Facebook back then with the big scandal with Cambridge Analytica. His investments would lose like overproportional value, and he might not even be aware of the risk, and he might not even know why his investments are dropping so significantly. Last but not least, it also defines how you proceed when getting older. I, for myself, I'm not sure if I want to run the same more risky strategy when I'm like 50 years old, have a family, a house I have to pay for, and I'm looking to like hopefully retire at a little like earlier age. Right now in Germany, the retirement age is 67. I'm not sure if I want to retire at that age or maybe even a little earlier. But at that age, close to retirement, I want my money to be more safe at the time for sure. So these are just a few reasons of why having an investment strategy is so important. And I know there are many more reasons. Now, do you have a clear strategy? And if so, what are your goals? Please let me know down in the comments below. I'm really interested in that. Now, I developed a strategy to help me with my investment decisions, to set up a clear path to building my wealth, including clear targets by age, as my ultimate goal, as mentioned, is to retire earlier than 67. It is also defining the general weighting of regions specifically to allow me like a proper diversification in order to manage my risk profile, my personal risk profile for the majority of my investments, but at the same time still allowing me to take some specific and calculated risks to hopefully, and as it looks like currently, increase the overall performance of my portfolio. In the next videos, I will show you how to develop your personal strategy and of course explain you my strategy in detail, including an overview of my portfolio. But of course, don't worry, I'm still working on the stock analysis that I promised you. It's just taking a bit more time to produce the content, including all of the research. So I decided to upload some other videos in between, which therefore I guess defines my YouTube upload video strategy. So that's my strategy for YouTube, obviously. And I hope you liked this video. If you did, please leave a like and also feel free to subscribe to my channel. I got way more content planned in the backlog. And that's it for now from my side. I'm out. See you next time.